Hey traders, welcome back to the FXE YouTube channel. We had some really nice price action last week, as well as some great trading opportunities. CPI did catch me a little off guard, but might provide new opportunities for this week. In today's video, I'll do a top down of both DXY and EU, go over the fundamentals, and then go over some trade ideas for next week. Starting with the fundamentals. Last week we had the inflation results. Inflation is important as it determines if interest rates will increase or not. And interest rates are the key factor that determine the strength of the dollar. So for PPI, the results were slightly above the forecast and more or less the same or slightly less than the previous month. And then for CPI, the results were also slightly above forecast, but the same or slightly less than the previous month. When PPI was announced, we kind of had a seek and destroy profile. I'm talking about the dollar. The highs were swept and then the lows were swept. And then for CPI, when the results were announced, the dollar just massively pushed to the upside. So knowing the results and seeing the way the market reacted to it, it seemed like an overreaction. So I wasn't expecting the dollar to move the way it did. And on top of that, we had a lot of recent press conferences with multiple Fed members that would come and say that inflation is under control and that interest rates shouldn't be increased for the rest of the year. So for now, it doesn't really make a lot of sense to why the markets reacted the way they did. So we're going to have to wait a little longer and see how the dollar moves from here on, whether it just continues to moon and push aggressively to the upside, or it was in fact an overreaction and starts to come back down. And for this week, we don't really have so much in terms of news. It's much quieter than the recent weeks. There's only two key events that I'm watching for. We have retail sales 30 minutes after New York Open on Tuesday, and we have unemployment claims 30 minutes after New York Open on Thursday. We do have Powell speaking as well, looks like at noontime on Thursday. And aside from that, not really so much. We have CPI for the UK. This could move the markets because GU will obviously have a huge reaction off the CPI results, and that will in fact impact the dollar, which will impact EU. Moving on to the charts. I'll do this top down, starting with DXY on the monthly time frame. So you can see we had a massive bullish push to the upside. We broke monthly structure. Thereafter, we had a pullback. The pullback came into the monthly breaker block. It also came into the monthly fair value gap, nearly coming into OTE before having a reaction and then starting to push and continue to the upside. We broke our initial buy-side targets. We came into the monthly fair value gap above, and because of that, I was thinking we'll start to have a pullback to clear some of the inefficiencies that were created on the way up before further continuation to the upside. Onto the weekly time frame. So it's more clear the bullish run that we had to the upside on the weekly time frame. We cleared this buy-side liquidity, which at this point created a structure shift, making the weekly time frame bullish. And then we also cleared this buy-side liquidity as well, which reconfirms the fact that we are bullish now on DXY. And we've also come into the weekly order block. We came into the weekly fair value gap, and thereafter we had a reaction on this bearish candle the week before last. This candle, it created a weekly fair value gap, and then the subsequent candle last week, it came down and filled the inefficiency of that weekly fair value gap, and thereafter started to push to the upside. So on the weekly time frame, it looks like it took the inefficiency that it wanted to take, and now may just continue to push to the upside. It hasn't broken the high yet, so there is a chance that it may reverse and come back down. In many cases, when we have reversal, the reversal usually takes some time to consolidate before we have the actual real move bringing the price down. So for me, it's more a matter of waiting to see how DXY reacts to the CPI news that we had, and see if the price does in fact come back down for a bigger pullback or just continues to push to the upside. Onto the daily time frame. So you can see we started to have some weakness in the dollar. The dollar came down and filled the weekly fair value gap. It even came lower and created a shift after the daily structure break, but it didn't close below it, so I don't think it's a strong break. And thereafter we had the CPI news that skyrocketed the dollar to the upside. On the way up, it created a daily fair value gap, and right now the way I look at this is, if we remain bullish, the price should come and retest this daily fair value gap and continue to the upside. It could break the highs first and then come back for the daily fair value gap before continuing to the upside. And if we remain bearish, so now would be actually a good area for price to come back down. We've swept the buy side liquidity. I wouldn't like to see the dollar come above this particular candle though. The reason being is this candle actually did a manipulation and cleared buy side before coming back down. So this for me is a strong high. So somewhere in between this high and the current price, if we start to come back down, there is a chance that we break through the daily fair value gap, retest it, and then continue further to the downside. Now on to the hourly time frame. So on the hourly time frame, you can see the week before last, we started to show some weakness in the dollar, where the dollar was pushing down lower and lower. We created the low of the week here, and thereafter had some reaction. So last weekend, we had the start of the war, and because of the start of the war, we opened with a gap. And after that gap was created, we mitigated most of the gap before continuing to push to the upside. This upside push came into the hourly fair value gap. It filled it and thereafter reacted off of it and then continued to push to the downside. We broke the previous low, thereafter reacted, and then continued to push lower, filled the weekly fair value gap where we had some consolidation, and thereafter continued to the downside, breaking the daily low. And after we had a break of the daily low, we had a pullback. The pullback came and filled a tiny daily fair value gap that was created on this push down. And after filling that daily fair value gap, we continued even lower, broke the previous low, created the low of the week, and then thereafter we had a reaction. After the reaction, we had some consolidation, and then when CPI came around, we had that massive push to the upside. This massive push to the upside, it cleared buy side liquidity. After clearing the buy side liquidity, we had a reaction. Price came back down. After coming back down, it continued to push further to the upside, coming into the hourly order block. After coming into the hourly order block, we had some reaction off of that, and that's more or less where we ended the week. So looking at what was created on these moves, you can see that we have some sell side liquidity that was created here. We have some sell side liquidity that was created here. When I did the daily review, I said that this right here could be a strong high, but then when we go on the hourly time frame, you can see that we have some relative equal highs here. So there is a chance that this could go and remain bearish. So I can see price going both directions. There are some signs that it remains bearish because we had that daily break. But seeing the way the price came up, there is a chance that it continues bullish from here. So when I look at scenarios, I can see 1, 2, 3 bullish scenarios. So for the 3 bullish scenarios, what I can see is from the current price, we've taken buy side, we've come into the hourly order block. I can see price come down, take out the sell side liquidity that was created on the way up, come into the inefficiency, the daily fair value gap, before continuation to the upside. The second scenario I could see is from the current price, we go and sweep the buy side liquidity, come into the hourly order block, thereafter come down for the inefficiency, and then continuation to the upside. The third scenario I could see is from the current price, we continue to the upside, break the highs, take out the buy side liquidity, and then come back down for the inefficiency, come into the fair value gap, and thereafter continuation to the upside. So these 3 scenarios I can see as my bullish scenarios. And then if we look at bearish scenarios, so once again, we've taken out buy side, we've come into the hourly order block. We did have a reaction and then a lower time frame shift as well. We could potentially from here come down, take out the sell side, come into the daily fair value gap, have a reaction, then break through it, retest it, and then continue to the downside. The second scenario I could see is from the current price continues to push up, takes out the buy side liquidity, comes into the hourly order block, thereafter reacts, pushes down for the inefficiency, reacts off of it, breaks through it, retests it, and then continues to the downside. Now on to EU. Again, I'll do a top down starting with the monthly time frame. So on the monthly time frame, you can see we had this massive bearish push to the downside. We broke monthly structure. Thereafter had a pullback. The pullback came into a monthly breaker block. It also tapped into monthly OTE on this push down. And thereafter, we had a reaction and then further continuation to the downside. We swept sell side targets. So the first one was here, and then the second one was here. So on the weekly time frame, you can see that we started to have a reaction and looks like the start of a pullback. So I could see from here we have a bigger pullback, taking some of the inefficiency that was created on the push down before continuation to the downside. But at the same time, seeing what we saw after CPI was announced, there is a chance that we may just drop and continue down from here as well. Moving on to the weekly time frame. So on the weekly time frame, you can see more clearly this massive push that we had to the downside. We had 11 consecutive bearish candles. This push down swept multiple sell side targets. So the first one being here, second one being here, and then we also swept the sell side here. And then after sweeping all those sell side targets, the candle the week before last, you can see that we had a reaction off of that and price started to push to the upside. So it looked like the start of a bigger pullback. But then we had last week's candle. So last week's candle, what it did is it continued to push to the upside. It cleared this weekly fair value gap that was created on the push down. It also came into the weekly breaker block. Thereafter, we had a reaction. Price started to come down a little, and then when CPI came around, we had a massive push to the downside. So the way I'm looking at it right now is this massive push to the downside could just be mitigation. Price could be coming to the lower end of this range before continuing to push to the upside. The second scenario that I can see, which may be the more obvious one, is we did have that aggressive push to the downside, and due to the aggressive nature of that push to the downside, maybe the price just continues to drop from here. So moving on to the daily time frame. So on the daily time frame, you can see that we started the week bullish. We continued to push price to the upside, broke last week's high, continued to push higher into the weekly fair value gap. After filling the weekly fair value gap, we had a reaction off of it, and then continued to push higher, breaking daily structure. And we've also closed above that weekly, the daily structure point. So technically, from a structural point of view, we are currently bullish on the daily time frame. But what kind of throws me off is on Thursday we had a really aggressive push to the downside. So it makes me think that, okay, we came and broke daily structure, which is essentially sweeping buy-side targets. We came into the weekly breaker block, had that aggressive push to the downside. Now it's time to just continue to push to the downside. But at the same time, I am keeping in mind the fact that we did have a daily structure break. This could just be mitigation before pushing price back to the upside. What have we done here? This pullback came down very aggressively, but it did come into OTE. It did stop at the daily fair value gap, and we are starting to see some signs of a reaction thereafter. So potentially there is a chance that price just reverses from here and pushes to the upside. At the same time, it could come a little lower into the order block and then reverse and continue to push to the upside. I mean, just think about it when you're looking to enter a trade on the lower time frame. So the price came into your POI. After the price came into your POI, you had a reaction, and then you have a follow-up with a shift. So once you see that shift, what are you looking for? You don't just enter a trade right there, right? You wait for the pullback. So the pullback, you expect the price to go into inefficient pricing or the extreme. And once you get into, once the price reaches that area, then you start to look for entries to take the price into your desired direction. So when I look at this, that's what I'm thinking when I look at what's happened here. All price is doing is coming back to inefficient areas of pricing or potentially the extreme before we take entries, wait for the reversal to take price further to the upside. The only difference is obviously we're on a daily time frame, so the scale is much bigger than when you're looking at the 5-minute or the 15-minute for trade entries. So that's why I still think there is the possibility that price may continue to push up from here. The only thing that really throws me off is the aggressive push to the downside following the CPI news. So just to reiterate, I see two scenarios on the daily structure. So the first is that we've hit our buy side targets, and now it's just gonna continue to melt and push to the downside from here. The second scenario I'm looking at is we had our break of daily structure. We have currently a pullback that's coming down to inefficient pricing, the OTE areas, and potentially as low as the extreme before reversing and continuing to push to the upside. So moving on to the hourly time frame. So the week before last, you can see we started to show signs of strength. We continued to push higher and higher to the upside, created the high of the week where we essentially ended that week. And then after that, so we started the week with a gap. So as I mentioned previously, we had a war that started last weekend, and because of that, the markets opened with a huge gap. And then after that gap was created, we started to fill some of it. We came into an hourly fair value gap that was created on this push up. We mostly filled it, and thereafter reacted off of it, and then came down even lower. So we came down lower, and to be honest, I wasn't expecting price to come down this low. I was thinking this was going to act as a breakaway gap, and we would continue to push up from here. But I don't know, maybe it was related to the events that happened last weekend, that price continued to push even lower. It filled the hourly fair value gap. You can see that we had a reaction here, we had a shift, and thereafter price continued to push to the upside. We initially filled the volume imbalance, so the gap that was created, the new week opening gap, we filled that. We also filled hourly, I think it was a 4-hour fair value gap that was created on this push down, and had a reaction, and once again came down a little deeper into this hourly fair value gap that was created on this push up, and thereafter continued to push price higher, breaking the previous high. And then once we broke the previous high, we had a reaction, came down and filled the inefficiency that was created on the last recent push up. And then we reacted, continued to push higher, created the or broke the daily highs, and then after we broke the daily highs, once again came back down and for a pullback. And then after that, we had a little crazy price action, more or less consolidation. We had a seek and destroy profile that was created as well, where we were taking out highs and taking out lows, taking out highs again, coming back down to extreme, taking out highs once again, and then we created the high of the week. After we created the high of the week, you can see we had an initial reaction that pushed price down, also created a shift, and then we had some consolidation thereafter. Once CPI came around, we had a massive push to the downside. This massive push to the downside broke all kinds of liquidity that was created on this push up. We had a pullback, came back into this extreme, and then created a daily fair value gap as well before continuing to push to the downside. Pull back into the fair value gap before continuation to the downside, creating the low of the week. And as of right now, you can see we came back into the daily fair value gap, reacted off that daily fair value gap. We actually had a lower time frame shift in this area. The bearish array is still holding, so we do have a bearish fair value gap here as well. And for me, when I look at this, price can go either way. So due to the aggressive nature of this push down, I can see that potentially we hit our buy side targets. We broke the daily structure high, and because of that, that could be more of just a buy side liquidity target, as well as coming into the weekly breaker block. So maybe we've hit our buy side targets. Now it's time to bring the price down, and potentially price just melts down from here. So if we continue bearish, I can see 1, 2, 3 scenarios that could play out if we remain bearish. So the first scenario I can see is we had a reaction here, potentially, and a lower time frame shift. Potentially we could see the price just come up from here, come back into the inefficiency, so the daily fair value gap, and after have a lower time frame shift, and price to continue lower after that. The second bearish scenario I can see is we have these relative equal lows down here. Potentially we go and take those out first, then the price comes up back into the inefficiency, and then comes down and continues further to the downside. The third scenario I can see is from here we go and target the lows, take out the lows, and after taking out the lows, then we come back for a pullback, taking out the inefficiency, and then continue further to the downside. So those are my bearish scenarios, but at the same time, I do see the possibility of price continuing to push to the upside for a bigger pullback. The reason why is, like I said, we've had a daily confirmation of a bullish structure break. Thereafter, we've had this massive pullback. So this massive pullback is coming into OT levels. It stopped at the daily fair value gap. So potentially this is just mitigation. And now we see the price continue to push higher from here for a bigger pullback. And for that, I can see two scenarios that could happen. So I don't really expect the low to go from here. It could, but that's not one of the scenarios I'm anticipating. So as I said, we've already had a lower time frame shift here. Potentially from this area, we could see the price push up from here, break the daily fair value gap, come back and retest it, and thereafter continue to push higher to the upside. The second scenario I can see is we have our relative equal lows down here. Potentially we can come down a little lower, take those out. We have the order block over here, so the extreme. We could come into that area before pushing back to the upside, breaking the daily fair value gap, retesting that, and then continuing to push to the upside. Normally from here, I'd go to the lower time frames and do a more detailed review and even go through the trades I took last week. But there was just so much to cover in last weekend's price action. And I've just gone through so much, and I don't really want to make this video any longer. I've gone through quite a bit of detail with what price action was showing us on the lower time frames, well, the hourly time frame, as well as the scenarios that I'll be watching for next week. As such, I'll just end it here. So just as a reminder, there is a lot of uncertainty in the world right now. There is inconsistency with the inflation announcement and the subsequent price action. So give it some time, let DXY show us what it really wants to do, and then start to look for trades. So as always, if I see some interesting movements in the price action, I'll do a follow-up video. In the meantime, trade safe, and I'll see you for the next one. Peace.
Black Swan.